Is the DAX low in or not? What you see here is the seasonality pattern between January and April. The red line represents the presidential year of the United States, which suggests a trough. At the end of February, DAX made that low and wasn't able to make a lower low last week, whereas the regular pattern suggests a low in mid-March. Who is right, who is wrong? I'm Joe, and I will discuss it in this latest JCS charting update. Let's hop into it. DAX H4 time frame, it's a setter indication. This is our subcycle chart to determine temporary bottoms at the index. This low, for instance, on that Friday made me buy for another roughly 1,000 DAX points. I got stopped out after I tried to rebuy into that decline because I thought DAX is actually going for another low. DAX made a higher low at the very early stage of our time frame for a subcycle low, and it got already confirmed because the rally was already between 200 to 300 points. It also closed that gap from the previous day. So that original projection I have in here doesn't seem to work out unless we see a large gap down on Monday, which I do not assume to happen. DAX also triggered that green sequence. It hit the first min target. The second min target, which is most of the time a turning point, didn't even get hit, so I assume 22,872. Even a new all-time high is possible next week. We stay with the H4 time frame. This time it's a JFD indication, and if you have watched my previous update, I talked about Elliott waves, and in particular about that we are looking for a wave 4 correction before wave 5 starts. Now, what do we need to know about a wave 4? It's the hardest one to trade. Usually I tell my members, keep your hands off it. It will confuse the hell out of you. It did to me actually last week as well. That's what I have to admit. And yeah, its major design is to shake off all participants before we see the last push to the upside in this case, because the trend is clearly up. My original idea, that was a classic A, B, C correction into that red sequence. It worked out quite well until here. I got rid of all my longs, which we bought on that Friday. And then it actually started to confuse me as well, because that last push actually looked already like non-pulse. It tricked me. I actually tried to rebuy and it didn't work out, and I took some losses here as well. And I thought, oh well, we are back on the original path as leg C for a lower low, but that didn't happen. We made in the pre-markets once again. That was here after hours, and that was at the pre-market before the cash opened. We were setting the low on Friday very early in the morning, and then we started to rip higher again. And then I realized that I started to short into here because I thought it's just a bounce and we're actually going lower. We got stopped out at break even again. I realized I need to come up with an alternative, and actually a lot of times in the past, especially at Nasdaq as well, these waves 4, they like to be triangles, and that's what I'm showing here, that red symmetrical triangle. There's the third touch here missing at the upper TL, and this is what the green projection represents. Once we get that third touch. It runs around 22,760 on Monday. And if we get a close, H1 or H4 even better, at 22,797, that blue sequence triggers. If you want to know the levels, members will get that on Monday on the weekend updates. Most of the time, that triangle overshoots for a faker up and then it pulls back. It could pull back even all the way down here, but I don't assume. I assume just a regular pullback into the middle, and then there might be already that breakout. The problem was going lower. I don't have any sign, or I don't have any triggers for lower yet. My trigger was 22,022, and even that here was basically strength from the bulls, even that candle here, that they didn't allow DAX to come anywhere close into that low of that Friday after hours. And we have triggered still higher on the cash chart. So I assume for Monday or the beginning of next week, bulls will try to get out of here. But remember, these wave fours, they are tricky and they can expand in time. It could run here all the way up and down and expands on time and drives everyone crazy. Once I zoom out here, you get a better understanding what we are looking for. We are looking for a finish of wave 3 in total. This is a start August. We have 1, 2, 3, 4, 5. That finished wave 1. Then we went into a long wave 2. It was a nice bullish flag channel. And then wave 3 started right here. And we are in the 1, 2. This is wave 3, the top. We have one wave there, 2, 3, 4, 5, and now we are looking for the wave 4 of wave 3 and then the last one, wave 5. And then we are looking for a bigger wave 4 to come down at DAX. And remember these triangles, especially that these symmetrical triangles, they like to be used as a consolidation in the trend. The last impulse here was showing that quite nicely. 1, 2 triangle consolidation as wave 2 and a nice triangle consolidation as wave 4. This is the volatility of the DAX, the so-called VDAX, on the daily chart. I gave my members a very important hint here, and we dropped to that neckline, which caused that rally from the previous Friday, after we picked up volatility once again with that latest drop. And usually, what I also keep telling my members, here's a cycle start, by the way, that first break off of that leg is usually associated with a second leg, which came. And I was assuming that we're actually going into that 100% target. But after what I have seen on Friday, we should assume that there might be another drop first to test that trend line before volatility is picking up again. And the last DAX chart for today is a weekly cash chart. I haven't showed that chart for quite a while. We had a very clean channel here, a rising channel in gray. And usually when they break up, you get 100% duplication of that channel into the direction of the breakout. That would mean an incredible rise to 27,350. Just that we have talked about it. And there's also that blue channel, which was running from October 2022 in a very clean pattern until it got tested here once again, little pullback, and then we broke out here with that January candle. And this one isn't that far away. Got upper targets next week around 23,800. If DAX wants to duplicate that channel to the upside. And once I zoom in here a little bit more, I put these primary cycle indicators we have right on top of it. And usually these primary cycles, members know a bit better about it, it's subdivided into 3 major cycles or 2 half cycles. Now the last one we had, which started in August, for instance, we had a 4-week major cycle. It ended in week 5. Then the second one topped in week 10. Then it came down in week 15, topped in week 18, and it stopped the whole primary cycle, which was our primary cycle bottom just before Christmas, in week 19. This is where the last primary cycle started, which we are in right now. Now the problem with this one is there wasn't really any major cycle low in there, so there was just a straight run all the way to the top into week 9, and this is a half cycle top, by the way. And it made that low. This is our indication by now. It might does a lower low next week. That possibility is still there. That we also made a half cycle bottom in week 9. Now, once these cycles break out, we are in a so-called right-hand translation. And this is what the initial start of that primary cycle showed us. So once we actually get above these all-time highs at 22,935, that second half of that cycle, it doesn't have to be that strong, but if it turns bullish, we usually see new highs into week 12 up to week 15, 16. In the extreme, in the extreme, it can go even higher. That's what you need to understand. If DAX fails right here, we're running into a left-hand translation, and that could actually fail really badly. The upper boundary for that channel is 23,850, by the way, for next week. I'm not saying that we are running into that next week, but that might be a target for the upcoming weeks at DAX. Let's hop into the US markets. What you see here is a AA survey. Yes, it is a survey. It's not a real sentiment. No institutions or any fund manager are part of that. But in the past, that sentiment here was a quite good contra indicator, because these people, the majority of these people are usually wrong. 60.6 is a very extreme bearish reading, and I think it's the lowest or the highest bearish reading in the last 4 years. That actually made me to build up my long positions on Friday. Yes, I kept buying into that weakness. It wasn't really the smartest idea. I kept on holding to these positions. And let's have a look at the charts. We have a quick look at the seasonality pattern again. The red line is still the presidential year. It's the same as in DAX, because the data is actually coming from the Dow Jones. The election is every 4 years, so we need actually a lot of data to get a valid pattern for that. The Dow Jones is the only one who gives or provides that data, because it's such an old index, over 100 years old. And we saw that low in that time frame on Friday, that dip. So it came a week after. And again, the presidential year says the low is in. And what's quite interesting is the regular pattern of the S&P 500 doesn't really give us a fresh low as in DAX. It's actually going for a double bottom or a slightly higher low in regular years in mid-March. That's quite interesting, just concerning that seasonality pattern. And by measuring the quality of that latest decline here, it's always worth to have a look at the advanced decline line at the daily basis. It measures the cumulative difference between advancing and declining stocks. And what we notice here is that that ratio is running flat since the end of January. We had that last push from the beginning of January into the end, and since then it's running flat, and that entire decline just oscillated on the same spot. And from last Friday on, or from Thursday into Friday, it actually went with much more advancing stocks than declining stocks. So that actually tells us still the market is still very strong. Even we saw that selling the entire week. Daily chart, cash indication. I have changed that former channel we were looking at into this. It's still an unconfirmed channel. We only have like 1, 2, 3, 4, 5, 6, 7 touches here on the upper trend line, but the lower one is missing. There's only one touch so far. It needs to have a second touch to call it a channel. So somewhere here, this could be the case if this low here last Friday wasn't a major cycle low, or it could be even a half cycle secondary low at the S&P 500. If the S&P wants to build that channel, 5760 is a very interesting number. That would match that channel around the 12th of March. So that could align with our low in mid-March. But if that is not the case, we have to assume that this channel is going to be touched or tested another time on the upper boundary. There are plenty of gaps open. The one on the all-time high right here. And what was quite interesting, with that low here on Friday, it closed the last gap from the last rally, which was also the start of a new primary cycle, by the way, in mid-January. So we just did that gap close and it turned around very intensely. The same happened, by the way, with that gap here. We had on the 5th of November, and that got closed right here with that candle in mid-January, and then it rallied up like crazy. There are plenty of open gaps still on the way up here. I didn't put them all in here. Also note the 100-day moving average. It likes to be support in a trend, and the S&P like to retest this line quite a lot. Have a look at this one here when it broke it, and then it came 2 days later, it came straight back to that line, was oscillating around it, and then it broke it to the upside, did a kiss and goodbye and rallied up. We closed right on that 100-day moving average on Friday. So if the S&P wants to be nasty, it just breaks through or it starts to oscillate here and tells us where it wants to go. If it wants to go up, expect 63.47 soon. If this here is actually a weekly cycle low, this is that pattern here, that August low qualified for it, that low qualified for it. And since we didn't make any low below that low, this one here actually qualifies for, or could qualify for that weekly low in that weekly cycle. A quick look at the Dow Jones Industrials daily chart, cash indication. You see here that symmetrical triangle, which is not at the top, because the starting point is after that first decline into the 3rd of Feb, and then we have the first touch, 2nd, 3rd, 4th, 5th. This is where it triggered and it broke straight through. And it hit the 100% target very nicely on Friday with that large reversal candle. It also touched our 43,154 and it did not trigger for lower. If this is a low, and remember, the presidential year suggests a low is exactly right here. The regular pattern wants a low in mid-March. The presidential year wants a low right here at the end of February. This is actually a strong reversal sign. We can even measure from the last primary cycle start, which started here on the 13th of January. The Dow Jones made actually a very nice correction into that. Then it was the strongest concerning all US markets, and now it did a 61.8 retracement of that rally. And yeah, well, it missed out by 30 points. It's a 61.8, but the Dow Jones is not as accurate as Nasdaq or as accurate as a DAX. So this qualifies here as a half cycle bottom, by the way. If this was here the primary cycle start, it was definitely one. And so we go into the second half of that primary cycle, and the all-time high right here where we made that double top will decide if we run higher into a right-hand translation or a left-hand translation. We could run all the way up here, we fail, and then we come down again. And we switch into the H4 time frame. JFD indication members know about my so-called M-top pattern, which hit the first target of that pattern at 43,140. Now, this cycle here is also out of sync if this was the low on Friday. That's what we need to know. The pricing is actually right. And there's this hidden wave wedge here shown in blue, and for some reason they know about it. There was a clean hit on Thursday before we sold into another low, and then on Friday we were hitting that line once again very precisely. If the Dow decides to break through that wedge or into that wedge, you have to be careful out there. That neckline here also needs to be, we need an H4 close back above it to turn back on the bullish side. As long as the Dow stays below that bold line and is unable to break into that wedge, we probably see more selling into the next cycle low, if it is still in sync. And we have a quick look at the Dow theory, and the transportation there at the bottom, the industrials at the top, and that was here that low we take as reference from the 13th of January. The transportations went below that low, so there's a slightly divergence because the industrials stay clearly above it at that 61.8 retracement we just talked about. So the Dow theory actually comes into play here, but it's not a very strong sign yet. It would be nicer if we see probably here a higher low at the industrials and another lower low which gets actually clearly below that red line at the transportations to have a stronger divergence considering that theory. Last but not least, the Nasdaq 100 daily chart cash indication, and it's running actually different compared to the Dow Jones and the S&P 500. What's different? Well, first of all of them started a new primary cycle on the 13th of January. Then they all made a new all-time high, slightly above. This one, a very nice number, 22,222. The S&P made the all-time high, I think, a day after, and the Dow Jones failed here, just at a slightly lower all-time high, made a double top and failed. This is also considered a double top, by the way, but to be accurate, it made a slightly higher high. Now, the Nasdaq is the only one which went below the start of that primary cycle, which is usually, in theory, bearish. For 100% confirmation, we need that daily close below that primary cycle bottom here of January. So we just went on Thursday, we closed just above it. Then on Friday we spiked below it, we opened below it, we spiked below it, and it went straight up. It doesn't mean we can rally all the way up here to test that trend line, then we come back down again. Usually these primary cycles, in theory, they last up to, they have an average, let's put it this way, of 15 to 20 weeks. And this year was week 8. So that means week 8 or week 7, I'm not sure. I haven't checked the weekly for you. But that would mean we see a low earliest from now on in another 7 to 8 weeks, and it has to be lower than that low or this low right here. 2132 is my trigger, which gives us a confirmation to run lower. If you remember the time between, I think it was in 2021 or 2022, the Dow Jones Industrials, they were making all-time high after all-time high, and the tech sector was actually selling day after day and was running completely different. So we had a complete rotation from tech into blue chips, and that could happen again. Note there's a cycle low here on the 7th of March. These cycles here, because it's quite a large one, they don't run as accurate. It could be that this was here a false flag of a break of that primary cycle, and Nasdaq is starting a rally as well. And that would also fit the presidential year. Note, Nasdaq corrected exactly 38.2% at 23.87 on Friday of that whole rally since, let me check, August, I believe. Yes, that was a perfect 38.2 retracement, and most of the time it bounces from there. But as I said, in theory, the primary cycle turned in bearish. That means we should see more selling at the Nasdaq. And a quick look what could happen on Monday. Nasdaq completed that red sequence we had to the last target, overshot here a little bit, but that was a turning point. It was, by the way, the same at the Dow and the same at the S&P 500. These levels, either at the 138 or the 161, they like to be turning points, and most of the time it works actually quite well. 2908 is the trigger on Monday or Tuesday for running higher. It needs an H4 close above to trigger that sequence to run higher into the next week. And this is gold on the H4 time frame. That worked out quite well. We were selling gold at 2954 or something, and we went for 100 points to the downside. We were getting rid of all our shorts once we triggered that red sequence here right in the middle of that cycle low. And we switched, we went long, and now we are going for a rebound at gold to run lower into the next primary cycle trough expected in the middle of March.